Hello, good morning, everyone. Good morning, and depending on what time zone you're tuning in from, I wish you a good afternoon and good evening. Thank you for joining me today for another interesting session on the Forex Morning Mastery, as we will be preparing for the second half of the week, tackling the second half of the week, and I want to thank you for taking the time to join me today. Well, this week has been quite interesting so far. Remember, we have been monitoring three financial instruments, which includes the USOILSPOT, which obviously has been struggling in the last 3 days now. The price of crude oil has been dropping significantly, which led to a sell position triggered yesterday. We will be talking about that in a moment. And of course, the USDJPY, which has been struggling, and of course, the XAUUSD, which has been in the limelight this week, as we saw. It's been on a tear. It's in another record high, and there's definitely an interesting trading setup that is developing for us to navigate. And of course, I did give us an update on the XAUUSD this morning on both my Telegram and TradingView platform, which currently is running with over 70 pips in profit. If you've been following along, you know that the market has been riding some powerful momentum, and we are here to look at how we can ride that wave going into the second half of the week. And of course, we have some high impactful event to look out for. For those of you who are joining us for the first time, you're highly welcome. Glad to have you around with us this morning. So today we will be running the Forex Money Mastery again. And like I usually say, it runs 3 times in a week: Mondays, Wednesdays, and Fridays. So it's not an education, it's not a signal service platform, but instead an educational session where we all come together to have a deeper understanding of what is going on in the market through the lens of price action and fundamental analysis. So once again, I do welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business. And hold on a second. Where is it? Okay, here we go. Just trying to load up my screen here. I'm not sure why this is taking some time. Okay, finally we got it loaded. Oh my god, I'm just... Okay. Please give me a moment, please. Let me sort this out. All right, I think here we go. So, as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that is going to be influencing the sentiment in the market today. And of course, that has been going on through the course of the week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. I don't know why my... Hold on a second. Let's look at this quickly. I'm struggling with some technical issues here. Okay, so I think I'm good now. So, based on the asset we are monitoring this week, we have been focusing on high impactful event from both the United States and the Japanese economic docket. However, for this week, since we are monitoring the USDJPY, we're supposed to be tuning into the US and the Japanese economic docket. So I do want to include some mid-tier economic features so we can have a broader view into what majority in the market are looking at this morning, and as I've been looking at since the beginning of the week. So right here at the beginning of the week, I'm not sure why my screen is giving this. This has never happened before. Let me refresh this page again and see. Is it from my hand here or is it FX Street itself? Okay, I think finally it's come back to. So we are looking at the US and the Japanese economic docket. So let's apply the filter. And here we have it. So on Monday, we were looking forward to this. Okay, the first one we are looking forward to on Monday was the OPEC Plus meeting. Remember, we talked about this on Monday. And from what's the outcome of the meeting, the major highlight from that meeting was that OPEC Plus is going to be sticking to some production increases, and this could lead to supply concerns. They reaffirmed their plans to gradually increase production from the month of April, which could add further supply to the market, and this may likely limit the upside trajectory. And of course, this was one of the major reasons while the crude oil has been finding lower highs since the beginning of the week. Then we also have the ISM manufacturing PMI from the United States, another economic event that usually gives us an insight into how well the manufacturing sector has been performing. And surprisingly, and beyond all market expectations, we saw reports coming in higher. And in fact, this is the first time that this PMI from the manufacturing sector will exceed the 50 mark. Remember, I said this, that the PMI is an index that has a range of between 0 to 100, where anything above 50 is considered to be an expansion, and anything below 50 is considered to be a contraction in that sector. And surprisingly, we saw a 50.9 actual figure as against the previous month, which was at 49.3, and in fact it was even higher than what market participants had expected at 49.8. Then moving forward, yesterday we saw a not too impressive data from the labor sector, where the JOLTS openings came in lower than the previous month, and in fact much more lower than the expectation that the market had forecasted. So we saw an actual figure of 7.6 million as against the 8 million which was projected for the month of December, which wasn't a very good signal, and this further buttresses the idea that Feds are likely going to be cutting interest rates anytime soon, and this is going to be in alignment with Donald Trump's narrative, and of course will not be favoring the US dollar, at least in the short term. Now, moving forward to today, Wednesday, February 5th, we are going to be looking at a couple of high impactful events from the United States economic docket. Now, let's talk about the first high impactful event here, and that is the ADP employment change report, which is coming in about I think in about 4 or 5 hours from now. That's 1:15 p.m. UTC. That's about 2:15 p.m. local time. And for those of us who do not know, this is a labor-oriented data, a monthly report that provides the number of new jobs added in the United States private sector on a monthly basis. It is considered to be a preview of the official jobs report, and a strong number can boost the US dollar as they signal a healthy economy. And if we look at the labor data that came in yesterday, the JOLTS report, which was at 7.6 million below expectation, could this be could the ADP become a reflection of that? We don't know yet. So we look forward to see what the actual data is going to be like. And from the narrative here, expectations are high as market participants are looking at 150,000, way higher than the previous month data. So we look forward to see what the actual data will be. So if it comes in higher, that will be a boost for the US dollar. And if the number comes in weak, it might put pressure on the dollar by suggesting slower growth. Then another impactful event we will be looking at today is the ISM Services PMI, another Purchase Managers Index, a report that measures the performance and expectations of the service sector in the United States. And of course, the last 7-8 months, the service sector has been doing very well. It has consistently stayed above the 50 mark. So we look forward to see what the actual data will be today. Expectations are 54.3. So let's see what the actual data will be. If it comes in higher, positive news for the US dollar. And if it comes in lower, there is a high chance that the dollar could drop further to the downside. Then we also have a couple of speeches coming up much more later in the day. 6 p.m. and 8 p.m. UTC, we are going to be looking at Goolsbee and Bowman's speech respectively. So you do want to be marking out the timing of this event. Then mind you, we shouldn't forget the fact that the NFP is still there coming up on Friday. And of course, the market might be a little bit reluctant to place aggressive bets, especially ahead of the NFP, and we could be seeing some extended sideways trading activity. So this needs to be taken into account while we are going to be reviewing the current charts at the moment. So moving on right now, we shall be diving right into the chart, and let's look at what is really going on so far in the market and what we are going to be doing to help us navigate the market. So the first asset we are looking at this morning is the USOILSPOT, where we had the privilege of buying and selling during the course of the week. However, the buy potential did not last long. Remember, we were talking about buying the breakout retest of the $73.50 level with the hopes that price will continue to the upside, breaking the previous high for more opportunities to buy. So we saw price break out, retest the $73.50 level. As you will see here, price moved about how many pips? Let's see, moved about 48.50 pips thereabout before that bearish momentum came in, taking me out of that position at break even. Then we saw price drop to the downside, triggering the sell stop order at the $73 area. And we saw price drop significantly to about 200 pips before this bullish traction came in prior to the release of the which report was that? I think the API report. Yes, the API report prior to the release of the API report. And for those who took advantage of this, well done to you. And the scenario here is looking as if price is going to continue the downtrend, because at first sight you can see price breaking down the support line at the 73, did a sharp retest of the structure during the New York session yesterday, and since then had continued to go through a range bound structure that has a high tendency of breaking through our key level at the $72 area to continue the downtrend move. Now, with the situation here, it's important for us to take into account some factors that could help us navigate this market at this point. Now, if you I think I mentioned a couple of them at the beginning of the week. I told us about monitoring the trade war situation, where presently China retaliated to the U.S. Tariff imposition on them. China imposed a 10% tariff on U.S. crude oil imports and additional tariffs on LNG, coal, farm equipment, and autos. So this is raising concern that demand for U.S. oil could weaken at this point in time. Then yesterday we also saw the U.S. crude oil inventory report, that is the API report, which came in at 5.025 million barrel, build up in last week's stockpile. And for me, this indicates high supply level. You know what that means when there is a increase in crude oil stockpile. It simply means that the demand, the supply in the market is way higher than the demand. And this, of course, may continue to incite selling pressure on crude oil prices. Then I mentioned earlier how OPEC Plus had planned to gradually increase production from April. Maybe this is as a result of dancing in the tune of Trump, who has been clamoring that Saudi Arabia increases oil production so that prices of oil will become cheaper, fighting inflation at the same time. And if this continues, that is in April, this could add further supply to the market and limit the upside trajectory. And oil prices at the moment, if we look at things in the last 3 weeks, have been in negative territory, suggesting a weaker demand outlook and could continue to, and continues its downside risk. However, in as much as everything is looking very bearish at this particular point in time, we will not ignore the Trump's renewed maximum pressure campaign on Iran. And he has said that it will be sanctioning Iran, cutting Iran's oil export to zero, potentially disrupting over 1.5 million barrels per day of supply, which could tighten the market and support prices as well. And then secondly, we have been, this is from a technical standpoint actually, we have been noticing that the last 24 hours, this area around our key level had continued to serve as a barrier for sellers. And could this become a platform that could incite buying pressure going into the second half of the week? Looking at this, it simply tells me how the market is digesting the fundamentals at the current moment. And what I will be focusing on going into today's session is this new setup that we are seeing here. So following this impulsive move, you can see price has gone through a consolidation phase, which technically is evolving into a potential pattern. So if we bring out our line chart and then connect the series of lower highs here, we have a beautiful descending trend line to help us navigate this market today. So if price continues to remain below the descending trend line, we'll continue to look out for patterns and structures that support selling ideas. So that simply means a breakdown retest of the $72 area will be a good opportunity to sell. And if price goes ahead to break out of this descending trend line, it could be an opportunity to buy as well. So let's have a level to help us navigate this potential to the upside as well. So we have the $72.50 level. So we mark that one out, and if price can break out of the structure, we will be considering buying this asset. I already have a buy position triggered at the moment on the USOILSPOT, which is currently running a loss. I'm hopeful if it runs in I'll allow it to play its course. If it wants to go down, no problem. But in the same time, I also have a sell stop order below the $72 area to capitalize on the downtrend scenario. So let's see how this is going to play out. Our center of focus today is basically between the $72.50 area and of course the $72 area, depending on the direction of the breakout, will determine where our next line of action will be. So that is my simple view on the US All Spot for today. I hope I made myself very clear on that one. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, with that said, let's move on. So, it appears my sell position on the US oil has gotten triggered at the moment, as you can see right in the trading panel at the bottom of your screen right now. And hopefully, let's hope that this could take us give us more profit today. So far this year, if you look at with $1,000 account, and then as at a month after, we are roughly about 6% in growth from where we are at the beginning of the year, which is not bad at all. 6% growth within a month is quite reasonable at this point. So let's hopefully let's see if we can double this by the end of the month of February. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and so far this week we've seen how the Japanese yen had continued to gain momentum against the US dollar thanks to risk on sentiment in the market. As you all know, optimism surrounding Trump's delay of tariffs on Canada and Mexico is the order of the day, and hopes for a China trade breakthrough are easing trade fears, and this is reducing demand for increasing demand for the US dollar at this point in time, and we never can tell will this influence this momentum negatively. Then concerns over Japan's concerns over Japan's inflation too is also very there. And when there is inflation in a particular economy, the chances that the central bank will increase interest rates is high, and this could also increase the value of the Japanese yen. So at this point in time, I'm strongly thinking that if we consider the rising wages in Japan, we have wages adjusted by 0.6% in December, with the previous month figure revised up as well. And this is further reinforcing expectations that the Bank of Japan may raise interest rate again. And this idea itself is strengthening the Japanese yen at this point in time. Then another factor here is the accelerating consumer inflation in Japan. We saw, as it last week or 2 weeks ago, where we saw an increase in inflation, and then this led to the Bank of Japan's reiterating that inflation is gradually heading higher, and services prices are also rising at the same time, strengthening expectation of continued policy tightening, which could further reduce or further narrow the US-Japan yield differential during the course of the week or during the course of the month. So for me, the path of least resistance still remains to the downside, and this led me taking a sell position at the 154.800 right below the structure. But I placed my TP target at the 153.700 right there. It's 153.700. That's a typographical error. So it's 153.700, which was about was not too much, about 92 pips. Never knew that this momentum could go this far at the moment, and currently I'm still waiting to see how I can capitalize on the next move from this particular area. And for those of us who capitalize on this opportunity, well done and kudos to you. Now, one thing I would also like to emphasize here is that we need to also be very careful about this continued bearish momentum we're seeing right now, as the US dollar could gain some traction anytime, though currently the US dollar is at its weekly lows at the moment. But if we look at the risk on sentiment in the market, and then the recent pause in tariffs to Canada and Mexico, and of course if the US-China trade also come to a resolution, we may likely see easing trade war fears, and this could reduce the demand for Japanese yen, and the US dollar too can also gain some traction in that regard. Then also, there is also this narrative in the market right now where there has been concerns over US tariff targeting Japan too as well. So investors are worried that maybe Trump's next trade target could introduce economic risk for Japan, and this could also weigh on the Japanese yen, favoring the US dollar at the same time. And at the moment, we can see the last 4 or 5 hours have seen a little bit of consolidation here. 1, 2, 3, 4, 5, 6, 7 hours, a little bit of consolidation around that area, and this could be attributed to the anticipated ADP employment report, ISM services PMI, and of course the non-farm payroll, which is coming up on Friday. Now, for us to navigate this market, I will be leaning towards a more bearish stance at this moment, but let's look at the structural detail on the 15 minutes time frame. If we can see a setup that can help us navigate this market going into the second half of the week. So interestingly enough, we have a descending trend line right within this whole area. However, I noticed that the market is going through a consolidation phase, trapped within a range bound structure. So we have a resistant line at the 153.550. So we want to be marking that level out. I want this to only be on this time frame. Then we also have a support line somewhere around the 150.150, I think. Yes, 153.150. So we'll place that to right there. And if we bring back our candle chart, you can see that that level has been broken to the downside. So To support the downtrend scenario, I will just add another sell stop order below the structure with the hopes that this momentum will continue further to the downside. So I'm going to be doing that right away. You can check the bottom of your screen. You'll see the price level I just included around that area. So let's see how far this is going to go, and then I'll place my stop losses maybe somewhere around the 153.300 level. Okay, so okay, it has gotten triggered at the moment, so I'll put it at 153.300 level. That is it right there. So we have a breakdown of that support line. We had a breakdown about 3 hours ago, and then we had a second one which was coming from an engulfing bearish candle, and it appears we had a little bit of a retest. Hopefully this momentum will continue to the downside. Now I think the stop loss on this position should be above that descending trend line. That's around the 153.400, as there is a possibility that price could come back into the structure to retest it and continue the downtrend. In fact, if price will come back into that structure, I will be adding another sell position below the 153.150. So I will readjust my stop loss on this one to 153.400 level. So let's see how the market will play out around this area. So we maintain a bearish bias at this juncture, and the only condition that will make me consider buying the USDJPY is if price action will break above that descending trend line, and the break above that descending trend line will have to come in the form of a breakout and retest of that structure, giving me that good confirmation that buyers are getting stronger at this point in time. So as it is right now, we have a simple trading setup around the USDJPY. So let's see how the market will play out at the moment. We have a sell position triggered already, and I wish us all the best of luck on this one. If you have any questions, feel free to let me know in the comment section. So I will be taking another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list today. Stay tuned in. All right. So in the absence of no questions, I guess we are all on the same page, right? And we've marked out these levels accordingly. Let's see how the market will play out. We have a sell position triggered at the moment. I'm also looking at adding more sell if I can see a breakdown retest of this 152.920 today. So let's see how it will play out, and trust me, I will be updating us if there is anything new around the structure on my Telegram platform. So I wish us all the best of luck on the USDJPY, and moving on to the final asset on our watch list. Stay tuned in. So the final asset we are looking at today is my favorite amongst them all, and that is the gold commodity, the XAUUSD. And of course, we saw price action. It's a record high. At the moment right now, price action had tested the $2,870 area. This is the first time price action will ever get to this point, and this record high is driven by the uncertainty in the market, which has been fueled by concerns over economic instability and global monetary policy shifts following the trade war fears. China's retaliation to Trump's tariffs has also reignited trade war concerns, boosting demand for gold as a hedge against this kind of uncertainty. And of course, yesterday we saw signs of slowing momentum in the U.S. labor market, where we saw the JOLT job openings drop significantly. Let me show you again. We saw the JOLTS job opening drop below what market had expected, and even below the previous month figures, which is a sign of slowing down in the U.S. economy. And then the upcoming U.S. economic data definitely could be supporting the gold, as traders are watching the US ADP report, which is coming up later today, and the ISM service PMI, which could, the way things are going and judging from the JOLTS report from yesterday, could reveal further economic weakness, and this may likely reinforce gold strength at this particular point in time. And during the course of the week, I had a couple of updates on this particular asset supporting that uptrend scenario. I think yesterday I shared something. Let me see if I still have it here. It was on the 15 minutes time frame. I'm not sure I still have it. Oh, I don't have it anymore. I do not have it anymore. I shared an update yesterday, I guess. So I don't have it anymore here, but it has been a roller coaster. It has been a rally for us all in this community on the gold commodity, and for those of us who capitalized on this opportunity, well done and kudos to you. So moving on into today's trading session, I already updated us with a new setup, especially if you are following me on the TradingView and Telegram platform, you must have gotten this update, and this triggered another buy positions for us this morning. You can see at the trading panel at the bottom of your screen, I also have another buy position, which is currently running with over 77 pips in profit at this point in time. Hopefully, it will continue to the upside. We never can tell. However, in as much as the path of least resistance is looking very bullish, we should also take into consideration the fact that there is being a delay tariff for 30 days. Trump, based on the agreements US and the Mexico and Canada had, there is a temporary tariff delay on both countries. And this may likely ease some market fears, improving risk sentiment, and slightly capping the gold gain. And you know, from a psychological perspective, when price of an asset reaches an all-time record high, there's always this fear that comes in that major players who had bought that move will want to start selling, and this could result in a crash. What I mean here is technically we have an overbought condition where gold's rapid surge to record high means it is technically overbought at this point in time, and this may increase the likelihood of a short-term pullback or consolidation before another gain could happen. So we need to take this into account while we review the current market structure. So this morning, while I was looking at the chart, I saw something that looked like a what's it called again? A wedge, I guess. Yes, a wedge, where price has been finding higher highs, as you will see here, and then also finding higher lows, but but at the end converging to form this kind of setup. And usually when you have this kind of setup on your chart, it's more like price action is likely going to be retracing to the downside by breaking down that support line that we have here to the downside. However, it is not all the time that the market follows this kind of theory. We may see price break above the structure. Sometimes it happens. It breaks out of the structure to the upside, maybe in the form of a false breakout before it incites the downtrend scenario. So I'm going to be taking all of this into account while we review this current market dynamic. So this morning, this was a setup I introduced to us this morning. So right above that resistant line of that rising wedge, we can see price broke out, retested it a couple of times. We saw the first breakout here. This was during the later part of the Asian session, and we saw during the early hours of the UK session, price gained momentum again. And it was at this point I gave us an update. Price action was around here. I think I bought around this point. Let me see what price level was that. That's 2858.314. 2858. So it was somewhere around here. I had to buy from here, and then we saw price break out of that resistant line to continue that momentum, hitting another record high this morning. And for those of us who capitalized on this opportunity, well done, and kudos to you. So it is high time you want to be moving your stop losses accordingly to secure some of the profits we have here. I personally have moved mine to 2864.9, which is close to eating right now, as price appears to be doing some retracement at this point in time. So please move your stop losses right now, secure this current position as we continue to monitor price action. So for those of us who missed out on this opportunity, well, at this juncture, we need to exercise a lot of patience. As you can see, price had broken out of the previous resistant line at the 2,862. Could this level become a platform for another new high? That is price coming back to retest the structure. If it does, I want to look out for continued buy pressure here for me to continue that uptrend scenario. So let's see how far will this momentum retrace to the downside before it continues. And mind you, it could also retrace back into this trend line, form a double bottom structure maybe to continue that uptrend move. So at this juncture, I still want to maintain a bullish bias on this particular asset. So what we are doing right now is wait and see how far will this momentum drop before it begins another second leg. Now, the highest point we have right now is at 2,870, is it? 2,870, I guess. Let me see. Let me put that 2,870. I think let's approximate it to 2,870. So if price breaks out, retests this structure again, I'll be willing to add more buy positions to my existing trade here. So I wish us all the best of luck on this bullish bias. Now, we should not ignore the potentials that sellers can also come in. I told you about the overbought technical conditions at the moment, which may increase the likelihood of a short-term pullback or consolidation phase before another wave of bullish momentum will happen. And then we should not also ignore the risk on mood, which could limit the upside trajectory. Of course, despite the trade tensions, investors are still engaging in risk assets, which could slow gold's momentum in the short term. So if I am going to consider selling the gold commodity, at least I want to see price break back below this trend line here. And if price can drop below this trend line, then I can start considering selling ideas. Not jump into a sell right away, but start considering selling ideas, looking out for structures like a breakdown, retest of structure. And I want to see signs that buyers are finding it difficult to climb back above that trend line. And this will obviously reflect on the chart as continued selling pressure, inciting a move to the downside, where a further breakdown of the 2,855 could welcome more selling ideas. So this is what I'm looking at the moment. We maintain the bullish bias, but if price drops, we want to be part of that move also to the downside. Then we could have our TP target for any form of sell position along this trend line here. So it could be looking at around 2845 and 2840 as a stop, as a TP target for any form of bearish bias at this point. Obviously, I will be giving us an update on both my TradingView and Telegram platform for the XAUUSD. So it appears the momentum is continuing. We see price oscillating around that resistance line. So I want to see a breakout retest happen, maybe on my 5 minutes time frame. We shall be scalping this market together during the Go-Go challenge in about an hour from now. So I look forward to seeing you guys there too as well. So that is my simple view on the gold commodity. Very simple one. Let's see how the market is going to play out. I will adjust my stop loss on gold now to 2,865 right now. So 2,865 will just do for me. And if it just drops from there, I don't care anymore. I think I've made a lot on this asset for this week. So that is my view here on the gold commodity. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I guess we are all on the same page. Mark out the structures as it's going to be helping us navigate this market this week. And look at our account. We started the year with $1,000 account, and gradually we are growing that account. And at the moment, we are about 6% growth in about 4 weeks, and hopefully we will be able to double this by the end of February, and let's see how far we can go on this one. So congratulations everyone as we continue to track our performance through the course of the year. So it's on this note, I would like to wish us all the best of luck. So we took on three financial instruments, the USOILSPOT, the USDJPY, and the XAUUSD, where we're able to identify simple trading setups that we are going to be using to navigate this market today. So let's allow our structures to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits our TP target. For those who join us for the first time, I hope you had a wonderful time, and I hope you gained one or two things from this session. If you did, you want to be part of our subsequent editions. The next one is on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets are doing, and of course prepare for that final trading day, which features one of the major events for the week, the NFP report. So I look forward to seeing you on Friday again. It's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.